Alok, how are you?
Hey, good morning, Sanjay. How are you doing?
Good,
Good, good.
good morning.
All right.
Starting to get a little cold already.
Yes. How is in Dallas? Is cold there?
It's a little cooler in the morning. Need a
Cooler, yeah.
little,
Today I saw the first time cooler weather today. First time.
yeah. Hey, I know we're waiting for others, but we can talk.
Yeah, yeah.
Um, mm,
Um,
so the Perla 1960 is a pass. Perla 249 is the one you're still considering, right?
that is correct. 1960 is in flood zone, so we just passed on that one. And yesterday, yesterday I get a call from the. I spoke many times, so finally we talked with the agent over there in Perla 249. So everything is now with me, and I rewrote everything, and looks much better. The only thing I wanted to talk to you, wanted to check with you. I mean, are we guys comfortable with the one studio? What do you call it? Studio apartment? This sort of thing. I mean, to convert it from the hotel to it's a new concept. It's an old concept, Sanjay.
It's been done. People have done this, converted hotels both ways, hotels into apartments, apartments into hotels.
Apartments into hotel. Oh,
Um,
really? Hmm.
if you have two-bedroom apartments and
Mm-hmm.
if layout
Mm-hmm.
is okay, you can convert into single bedroom with and ensuite, right? So
Right. Right. Right.
um,
Okay.
I I never could figure out which one is better. And I don't think it's like, oh, it's always better to convert to a hotel motel, or it's always convert better to convert to an apartment.
Mm-hmm.
Um, I'm assuming areas change, right? So like
Yes. Yes.
Pasadena, Texas has
Mm-hmm.
become more and more a transient with the growth of
Mm-hmm.
the sh ports, right?
Yes, yeah.
And
Yeah.
ports moving north a little bit. So
Mm-hmm.
Pasadena apartments may shift to more of a
The,
hotel motel type, where they're looking more for a day type of a
mm-hmm.
rate as opposed to the
Okay.
families, right? Because
Mm-hmm.
past because the
Mm-hmm.
port, the
Mm-hmm.
main port used to be Galveston. From what I understand, main port used to be in Galveston here, but
Yeah.
but
Mm-hmm.
now they moved it to La Porte,
Laporte,
this
Laporte,
area, right?
Baytown.
So
Yeah. Yeah. Yeah.
all
That's
the
what it is.
ships now come here, and then they
Mm-hmm.
take either this, or
Mm-hmm.
all the trucks
Baytown.
take this, and then they go to rest of the US, right? 40, 69,
Right.
45, 35,
Right.
and up they
Right.
go.
Yep.
So
Mhm.
but anyway,
Yeah.
so it changes, we kind of have
Yeah.
to stay aware. Okay, so
Mm-hmm.
where is the underwriting falling for this one?
Okay, let me open it up. Give me 1 second. Let me go to my screen. Give me 1 second, please. Okay.
Okay,
Let me go to open.
you're gonna share, right?
Yeah,
Or
yeah.
you
I'm
want
gonna share it. Let me open it first. Then I'm gonna share. Give me just few
perfect,
minutes, few
perfect.
seconds, I should say.
Go ahead. Welcome everybody. Good morning. We started early, little early.
Yeah. 49 downloads. So one thing is very clear, they're all bills paid, but they charge for a smaller unit $215 for the all the utilities. For the little bigger unit, they charge 250. So that I figured it out, which was not clear before. So
So
they
so
charge,
it's a
yeah,
fixed $250 fixed
yes,
flat fee.
yes, yes,
That's good.
yes, yes.
And
That's
by
good.
the
Hmm.
way, just for
Hmm.
everybody's
Oh, yeah.
information here, in utilities, and I don't know if it's a Texas thing or a federal thing, but you can't say, hey, I'm going to charge $150 flat fee for utilities, for electricity, because you're supposed to bill back the actual amount, right? But if we
Mhm.
say, oh, we're doing a flat admin fee
Mhm.
for property, whatever, right? We can
Mhm.
do a flat fee that way, monthly recurring flat fee. So just always have to be a little careful. And some property management will flat out say, no, you cannot charge a flat fee. Right? We can as long as you call it admin fee. Okay,
Got
go
it.
ahead.
Okay, so like what I understood yesterday after discussions with the people, can you see my screen?
We can see your screen. Yeah.
Okay, cool. So this is their unit mix. If you look at this screen, which I just copy paste here. So their unit mix are this your mostly 32 and 40. Only 5 units are two bed, two bath. And most of them are like one bed, one bath, or they call it studio, 32 and 40. So like most of them are I should say like one bedroom, one bath, most of them. Only five are like that. And so this is for the tax summary, which is I'm not going to talk here right now. Okay, unit mix. Okay, so in P&L, what I did now, uh, so if you look at this cost here, which is other residential income, what I did 240 per month. I average out from the couple of units. So if you read here 240 per month per unit, 240 multiplied by 12 multiplied by 77, and assuming 88% occupancy, so the value is coming 195, 148. Does that make sense?
Okay. Yeah.
And then plus U55 from T12. So U55 from T12 is nothing but other income like the application fees and late payment charges. So that is coming from the T12. So I added those two income as a other residential income.
Okay. How much
So
was there? T2? So 230 to 259. Okay.
so
Um,
240 per month into 12 months, yeah, into 77 units. Then multiply by 0.88, keeping the occupancy 88%.
okay.
And
What
then,
is U
yeah,
55?
yeah, I'm gonna show that T12U55, which is gonna be this value. Okay, yeah, this what I did yesterday, Sanjay. So this is only from T1. If you look at this number is from T1.
Hmm.
This is my version because the values are not very correct here. The charges, they hide little bit charges. So for example, let's see here, high risk. Okay, the like court fees. Court fees, if you notice here, they charge 433 first year, I mean the last month, then minus 380. I don't know what does it mean, negative 387. Can you, I mean, is it possible? Negative
Yeah.
387?
Yeah, so it may be like they sometimes they will charge it, but then it's either a write-off or
Mm-hmm.
they
Mm-hmm.
reverse it, right? Like they would
Okay.
charge it, but the expense actually not end up happening. But then those span over a closing period, end of the month. So when
Okay.
where there's a reversal of a charge, it may show up as a negative item.
Yeah, sure.
But
Okay.
to your
Mhm.
point, that's one of the reason we for some of the other income and expenses, we
Right.
always like to use the T12 or T6, whatever the
Yeah,
longest we
exactly.
have
Yes,
available. Yeah,
yes. So here I just kept the one which I got from T3. So as per their version, this is T1, which is 5196 per year, but I keep close to T3, which is 22,000. So I basically reduce the income for this court fees.
that's good. Yes, yes. And I mean, they you can charge the court fees all you want, but if they're delinquent,
Yeah, exactly.
how what are you going to get back, right?
What are you
So,
gonna Yeah. And similarly, if you look at here, cleaning charge fees are very much variable. If you look at this, 0, 0, 0, 0, and for last month they charge 1588, and then they charge in the T1 is 4764, T3 is 1588. So I just keep 1588,
that's
T3
good.
the charges. Is that fine?
Yeah, yeah, that's good. That's good. So the lower
Yeah.
amount.
Lower amount,
Yeah,
yeah.
yeah.
Similarly, residential. So I just, tune the charges. And the one I wanted to discuss, I showed you that one. And pretty much everything, I just keep whichever is lower, T3 or T1, whichever is lower, I keep that one. For example, pest control fees, I don't know, it's coming two times. They're already charging somewhere, so I just put it 0 here. It's not huge
Yeah,
amount,
that's fine.
so it's not a
That's
huge
fine.
amount.
Yeah, yeah.
And the last thing, like okay, pet fees is there. Yeah, it's
So
pretty much, yeah.
yeah. So one of the thing while we're doing this detail underwriting, one of
Okay.
the thing to keep in mind is keep the perspective, right? Um,
Okay.
Eventually, when you run the deal, you'll have to have all these details and go in. But from a
Mhm.
valuation perspective,
Okay.
you have to look on this deal, what does the $5,000 other income makes a difference on my pricing,
Yes. Yes.
right?
Yes. Correct. Correct.
So
Mm-hmm.
the prioritization of your time is a big thing, right? Especially as you get
Mm-hmm.
in multiple deals. So just
Mm-hmm.
keep that in mind that how important the line item is from a dollar. And if it's a smaller deal like this, yeah,
Mm-hmm.
$3,000 may be a big deal. If it's a 400
Mm-hmm.
unit deal, 2000 may not be a big deal. We just average out, we move on. So but just to keep something in mind. But
Sure. Sure.
you've got lower amount of 64,000 of other income,
Yes.
other from utilities. That's good. This is really good. That's good. Yeah.
Yeah, rather than they keep 92,000, I keep $64,000
Yeah. Yeah.
in the lower side, basically, just to make sure, we are on the not on the higher side.
Yeah.
So this is coming now, 64,000 from the other end,
Yeah.
and this is the from 240. So this is coming to 50.18.
Okay, perfect. This is good. This is good. Yeah.
Yeah. And then
So
everything else. Mhm.
yeah, and everything else is same. The taxes, we did
Yeah.
this purchase price.
This is purchase price, Sanjay, this one, and this is the price is coming for this
Okay.
2024 7.7 million. 7.7.
Okay.
Yeah. So I took it that way. Insurance, we haven't heard, but as you mentioned yesterday, should be lower because these are smaller units. So I
Yeah.
keep pretty much same. Is good amount, 1455 per unit, I believe is good.
Yeah, I mean, these are like 400 square foot units. So this is
Yes, yes,
almost
yeah, yeah,
a
yeah,
lot of the
yeah.
time insurance estimate is 80, 90 cents a square foot. For bigger
Mhm.
units, bigger houses, it's 40, 50 cents a square foot. But
Yeah, okay.
here
Yeah.
at 1440, it's almost $3 a square foot insurance, right? So
Yeah, you're right. Yes.
it's
So
it's
yeah.
pretty high. It's pretty high. And it may be that because as you get
Mhm.
smaller, per square
Yeah.
foot will go up. So that's okay.
Okay.
So
Okay. So
let's
this is,
see.
yeah, 440. This is a square feet. Just for FYI, this is a
Yeah,
square feet.
yeah. Okay.
Okay. So
So that's good. So P&L is good.
PNL is,
Rest is
yeah.
what we discussed. We
The only
adjusted.
thing, the only thing I would like to again bring to your notice, the personnel cost we adjusted. Is that
Oh,
fine? Like,
still. Oh, yeah. You can lower more. You can
yeah, I agree.
lower a little more.
Yeah, yeah. With the 77 units, and mostly okay. So let me keep minus 50% then, just
Yeah,
so
that's good. That's good. So
that's good. And the is
112 is 60. You'll need two people here. 77 doors to at least two people. So
okay, okay, okay.
yeah, fully loaded, 50, 60,000 each
Mm-hmm.
is a good amount to budget. So this is good.
So good. Okay. So this is pretty much here and everything. Keep the advertising pretty much same, landscaping, everything. And landscaping I increased because I saw that there was good enough green space. And
Okay.
they try to hide during T12. So,
Okay.
okay. So should I go back to dashboard now, Sanjay,
Yeah,
or we?
let's look at the dashboard now.
Okay. Okay.
So what is our IRR?
Okay. Let me scroll to here a little bit.
Okay, so it's coming out to be a decent IRR.
Yes.
So okay, can you zoom out a little bit,
Okay.
Alok?
Yeah.
Sorry, zoom out. So make it smaller so we can see
Okay.
all. Oh
Got
yeah,
it.
yeah.
I know what is in there. Okay.
Okay, there it is. So now, okay, so our purchase is $211 per square foot. So scroll down
Okay.
a little bit more. Yeah, so our purchase is $211 per square foot. All in is 235, and exit
Yes.
is 341, $341 per square foot. So that's what
341.
I'm worried on this one.
Yeah.
Will
Yeah.
we
You
be
told
able
me.
to $341? Okay.
So, so how can we reduce to like 320 or 310 just
Yeah,
to,
yeah. So let's lower the price a little bit and increase the exit cap rate.
so load the price means over here, should I bring to
Yeah, just
7?
just make it 7. Let's say
Okay.
we're gonna play something here
Oh, yeah, yeah, sure.
and
7.
increase your exit cap rate to maybe 6.5.
So it has to be somewhere here, right?
Yeah, so I 32.
Yep.
That right there.
6.5.
Yeah.
Okay. So
And
now, so you want to see here what it
so
brought
yeah,
to
so now the our exit is $320 a square foot. So it went
320.
down a little bit.
Yes, 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 yes.
Yeah.
So,
So,
okay.
seven-ish. So from a return perspective,
Mhm.
7-ish million works and a very comfortable number.
Okay.
But
Yeah.
I am really concerned about that exit price of 300 plus. You think that area is so good that it can support uh,
Well, like I can
$300
say,
square foot?
yeah, the Highway 6 and 249 is pretty, I should say, very visible. And
Okay.
the and it's busy area in the sense like a lot of people movements are there, and I think
Hmm.
this is a new concept to me at least. As I spoke yesterday, she said minimum 1 year lease they sign, but 3 months, 6 months, or 9 months they charge. I wrote it down almost hundred
Premium.
dollar or
They charge
$50 more.
premium. Yeah,
Yeah, yeah.
yeah, yeah,
And I went both places, 1960 and 249, both were 90% plus occupied as per the leasing manager.
yeah.
Yesterday, when I called many times, they were busy. So she called me back after 2, 3 hours.
Okay, okay.
So,
So yeah, so these
mhm,
boarding slash shorter term rental can make more
yeah,
money, but from a loan perspective, loan is difficult on those shorter term
really.
rentals.
Okay.
But the cash is good. Look at the average cash on cash is 10% on this. So
Yeah, okay, cash flow 10%. Yes.
yeah,
So, okay.
I would say this. If I
Mhm.
get this at 6.5 million or something, maybe we will do this.
Because of exit strategy, right? During exit, then you want to get any surprises if you have to lower your sale price, correct?
Yeah, yeah, because exit, if I don't get $300 square foot, I get a
Mhm.
little bit lower, we still make money, right?
Mhm.
Because
Yeah, yeah, yeah. So you want me to start with like seven-ish or six, late six,
start with 6.5, yeah.
6.5. Okay,
And
okay.
uh and talk
Mm-hmm.
to broker this thing like, hey, look,
Mm-hmm.
we are underwriting, and in 5 years it looks like $300 per square foot exit.
This
And
one,
I'm
yeah.
not sure Houston market can support
This
that
system.
high of a dollar
Okay.
per square foot exit.
Got it.
So
Got it.
that's where we are having to lower a
Okay.
little bit. We're doing very aggressive on the profit and loss,
Got it.
our expenses
Mm-hmm.
and income,
Okay.
but we're a little conservative on our exit price because of that reason. We're coming at 6.5,
6.5.
and
Okay.
let's have a conversation. And
Yeah.
just remember, you have a
Mm-hmm.
conversation on this deal, but at
Mm-hmm.
the same time, this one doesn't work. You are building a relationship and asking
Yes.
for a next off market. That's always the
Yeah,
other hook. So
this is the same broker I spoke for quite a good time for Caldridge. If you remember, it
yeah.
came like 1 month back, and it was in flood zone, so we just let it pass. So I spoke
Mm,
with the guy 2, 3 times. So I'm going to talk to him again. So build some relations, I believe. And
mhm,
yeah, you're right. Yes.
mm. Okay, that's good. That's good.
Okay. So save it, and I will put it there. Okay. Okay, I'll do that. Thank you. Thank you, Sanjay.
So this one is basically I'm gonna mark this as a status on the
Okay.
in Monday.com as a like a low priority LOI and offer,
Okay.
because you're talking to broker about
I'm going
potentially
to talk
doing
to
an
him. Yes.
LOI.
Yes.
We did the
I will do that.
detail.
Mm-hmm. By
Yeah.
offer.
So that
Okay.
at least it stands out.
And
Okay.
if the broker says, okay, go ahead and submit your LOI, or I mean, I don't know how do they react mostly when you lowball or not lowball exactly, but we are offering what we feel. Usually they say, okay, send your LOI, or they usually don't say that thing.
It
I mean,
depends on the each deal. Um,
okay, okay.
if they have a lot of interest, they may say, well, don't worry about it. And you switch, okay, this one didn't work out, tell me another one.
Okay,
They're
okay,
not getting much interest. They may say, oh yeah, submit it, seller is open, whatever.
got it.
And
Got it.
before we submit LOI, I would
Mm-hmm.
ask you to get the debt code, get the insurance, and we'll
Yes,
verify, a few
yes,
more of these things we underwrote. So, but that's the
okay,
question you're going with. If they say yes, submit, then we
yes.
do spend more time.
Spend
Otherwise,
more
no,
time.
no, yeah,
Okay.
yeah.
Okay, and one thing I forgot to ask you, Sanjay, like here, we are assuming agency loan. Is that fine? Because right now it is 90% plus occupancy or 90, around 90%. So
Yeah.
we are assuming we'll get the agency loan. Is that fine, assumption?
Yeah, so we're assuming because they have converted, but
Yes.
we will need to get a quote. I have a little doubt on this one that agency loan may be an issue because it used to be a hotel
Yeah,
and
yeah.
and
Okay,
or they
okay,
have the shorter term leases.
okay,
So,
okay. Got
but
it.
if broker says, hey, don't worry because they have higher offers, then we don't need to
Then yeah,
worry.
that's and last thing, like, can I get the? I will ask Ellen to give me the to find out the number for to get the quotes for or for the lender or something. I didn't talk to anyone yet, so I'll figure it.
Okay, yeah. Hey, Alan, can we do? Can we have another board in the same? Okay, let's see. Everybody can see my screen, right? Yeah.
Yes, yes, yes.
Alan, can we add something here, our insurance and lender contacts that we usually reach out to?
It'd be great.
We can probably figure something out.
Yeah, so that everybody we can just say, hey, because for insurance is JT and Nimble. For
Mhm.
lender, we usually do Derek first, but we have a few others depending on the size of the deal and type of, agency versus. So we can
Okay.
have like the common contact that we use once
Mhm.
we start to get
Sure,
serious.
sure.
So maybe,
Okay.
Alan, only 3, 4 contacts, right? We don't want to do like a list of 20 things, so then people will get. Okay, let me know, Alan. Let's do that today. So, and let Alok know once that's done, Alan. Okay.
Thank you.
Perfect. Thank you.
So I have one more to go. I will wait for another 20 minutes if anybody want to go further. There's a forest park. I just worked a little bit more last night, so I can go that one, but give me just 10 minutes. Meantime, anybody is having, some stuff you guys can discuss.
Well, I believe Cody had something
Okay.
ready for review.
Okay. Cody, do you want to share screen? Should I open it? I'm trying to fix this. I can never scroll here.
Oh, that's not good.
Sorry, Cody. Is Cody here?
If you're at work and you can't talk, that's fine too. Just drop a note in the chat. If anybody else has anything ready
Yeah,
to
can I go and review
share?
something?
Go ahead. Go ahead.
Can I share my screen though?
Yeah, go
Let me
ahead. Go ahead.
see. Hold on. Let get this here first. Yes. Okay. Here. Sorry, I'm moving screens like crazy here. So okay. Now we're talking. Okay. So this is one of the ones in Houston. Big deal. 384 units, new build, 2022. And I started putting the numbers in. The guide price is 96 million, so basically 250 per door. Off of the numbers that I have, that's not even close to what they should be charging. But I'm so off that I don't know if I did something wrong. I know also that these big deals they tend to like skew because they're so big, right? So any little detail really throws you off. But still, I just wanted to run it with you, just to see, if I'm
Yeah.
doing something wrong.
So, yeah. Oh, so you're doing this. Okay. So this is a new loan, right? So you put a new loan here.
I put a new loan, yeah.
You could put 5.5. I think we are low enough on these.
Okay.
With buy down, we can get even a lower one. CapEx, you have very little, which is okay. This is a new build,
Yeah.
2022.
Yeah.
Let's look at closing cost tab. Okay, you adjusted. Okay, exit, maybe leave it at 3%.
Okay.
Yeah, because sometimes you never know. Let's look at the P&L. So just a quick look. This is still a quick look. So they
Yeah.
are at 4% occupancy currently, and
Yeah,
you're
vacancy,
going
yeah.
with 7%, total 11%. Is there a
Mhm.
reason you would not leave it at 4-ish%
No
for
reason. No reason. I
okay?
didn't have
So
any
put
reason. So maybe
yeah,
just
so put 5%, yeah.
5% here then.
Yeah, 5%, because they are at 4% right now, right?
Yeah.
Change change year two also to 5%.
All right.
And does okay, that changed for all the other years, so
Sure.
that's good. Okay, other income we're leaving as is. Taxes. Okay, so did you adjust that taxes to 1.76?
I adjusted it because they had like almost double in taxes, and I don't think it's gonna go to double.
Okay. Yeah, so we'll have to justify. Good thing you highlighted in yellow.
Yeah. Yeah, exactly.
Insurance, you increase a little bit. Again, 900 for new build, probably good. Maybe a little higher side, but that's good initially.
They had like 600, so I think 600 is still kind of low for what we have right now in the environment that we're in. But I
Okay.
could lower it. I mean,
No,
or I
that's
could
good.
just leave it like this, and then we'll
This
see.
this is good. This is good for now. The other
Okay.
thing is, looks like the T12 vacancy was 46.8%, right?
They were in lease up, yeah.
Because they were in the lease up.
Yeah, and I talked to the broker, and he's the one that told me that they're already at 92 occupancy, and 96 leased out.
That's good. That's good.
So yeah.
So the one thing to consider here is look at your utility expenses. Utility expenses are 240, 340, almost like 380, right? If you add up those little cells, 162. Sorry, E24, yeah.
E24.
E24 and the four, the 3 cells below it, add all of those. Just select them. One more.
And then one more, yeah, for the utilities, yeah.
Yeah,
So it's
so
gonna
your
give
total
you
is
378,
378, and
Yeah.
our other income is 220, which means 220 probably includes some utility reimbursement, but we can probably bump it up to at least 90% of 378 plus some income. So what is the T1, T3? So go back to the actuals in unit mix. From the cell C2, that's a drop down.
Yeah.
Select T3.
There we
And
go.
this annualizes. Oh, that's actually lower. Do a T1. Oh, look, T1 is 405, right? That's the number that I would expect to see more like
Right.
that for other income. So let's go to P&L and increase our other income. P&L.
P&L, I'm sorry.
Yeah. So yeah, increase the so do this, double click there. Double
but
click.
it's taking T1 now, right? So okay, so what do I need to do now?
Oh, it adjusts on this side also. Okay.
Yeah.
Interesting. Okay, yeah, now let's look at the dashboard. So if it does do this. So this is a little aggressive, 413, right? We'll have to see.
Oh, yeah, it did change.
Yeah, okay, so scroll down a little bit. Let me see. Exit cap is 5.8. Probably this will go at exit at 5 cap. So you can put a 5 cap exit. And your DSCR is still 1.83. So now you can bump up the price a little bit.
Yeah.
Maybe do 80.
Okay.
Okay, so that's good. Now go back to P&L. So the rent I bet they think the rents can go up even higher. So how is this location?
Let me look it up and I'll share that too, so you can see it. I had so many tabs open that I had to close a bunch, so I had
that's
to
fine.
open it
That's
again.
fine. So this is a 3% increase in rent. I bet brokers are underwriting a lot higher rent increase here, in addition to the other income increase. So, oh, look, right now we are increasing. Oh yeah, from T12, 6.7 million total net income, A17. And we're going to 8.9 million. So from a T12, it's increasing quite a lot, mainly because of all the lease up vacancy that they had.
Yeah. Let me show you the map then, because I have it open right here.
Oh, this is just
So it's
north
right
of
here.
Heights. This is just north
Yeah.
of Heights. Yeah. So
Yeah.
this is that location. Okay, yeah, that's a good
Yeah.
location.
Yeah, that's the one that had
Yeah.
the Whole Foods market right here.
Yeah.
Close, like less than a mile.
Yeah, so the rent comps, let's go look. Go back to the Excel.
Yeah.
Go back to actuals and unit mix. So they're charging, or they're at 2114. Go back to P&L.
But that's a target rent though. What they're
Yeah,
actually charging is like 1967.
1967. Yeah.
So they
So
can
go
go
back
back
to
to
P&L.
P&L.
Yeah, so you can increase the rent a little more. Put a 6% in year one.
Where is that? Let me
E3.
E3. Okay, perfect.
So increase that to 6. Let's see. That's okay, maybe 7%. We get to 2100. It's still $2.34. Now let's go look at dashboard. Okay, so maybe we can increase a little more.
82
So
maybe.
yeah, so looking at everything here, the only other thing is we will get some sort of a pref on this. This is a bigger deal.
Yeah.
So
Yeah.
on the right hand
right
side
here?
yeah, so turn that on, and then let's plug in. Let's see, we get to 80,
Let's see.
85%,
So
15.
it's 25 is the total equity raise. So
Yeah, so put 8 million. Let's put
8.
8 million. See if we can get 8 million and do 12%.
12. Okay.
And Sanjay, sorry, what's the supplemental loan for?
So we use this section for both supplemental or pref. And pref is like there are groups who are willing to fill in the gap between equity and the first lien loan. That makes sense?
Do they actually get equity though? Or is it just like
They don't.
another lender? It's just another lender.
They are like a lender, but they have more rights to take over the deal than a lender. Lender's only recourse is foreclose, right? Lender cannot do anything else other than foreclosing. But these pref guys have they have other rights basically to do things. So
Okay.
It makes sense. Sorry. So essentially, we're giving these supplemental pref individuals a premium for bringing in that 8 million of the equity that we're seeking to raise. Is that right?
Yep. Okay.
So should I increase it a little bit more then, since this is collecting at 21 or
I
no?
think this is good.
Okay.
Because we are very aggressive on rent increase, cap rate at exit.
On everything, yeah.
Not a whole lot of rehab here. So it's hard to get to 96 on this. Likely a pass. Maybe you have a conversation with the broker and say, hey, I am at this rent, this exit cap. I'm doing an agency loan and I'm still in low 80s. Where am I off on my assumptions?
Okay.
And so, yeah, you can update, but I think we'll archive this one.
Okay, I'll go ahead and archive it then, but I'll still, talk to the broker then.
Yeah.
Cool. Let me stop the sharing then.
Sanjay,
Okay.
can I ask you a question about this one?
Go ahead.
So were they not getting the market rent currently? Was I understanding that incorrectly, or?
No, you're right. Typically what happens, especially on a $400 apartments, you start leasing, you got vacant and ready units, brand new units, right? And you don't say, oh, I'm going to keep increasing rent every time I rent it, because you want to lease up as quickly as possible because you have negative cash flow,
Even
right?
though
So
this is a new construction, right?
new
Or
construction, yeah, because you have construction loan, right?
yeah,
And you cannot refinance until you have like 90+% occupancy. And construction loans are 10-11%, right? They can be 7-11%. So when you have, this construction, they may have a $60 million loan, and even at 10%, annually 6 million is your cost, right? So you want to lease up as soon as possible. So on a lease up, invariably, you don't have the market rents because you got vacant units. And by the time you fill the last unit, the first unit you fill likely is a year old, right? Because you're filling 400 units. So if you're leasing 20 units, 30 units a month, still taking you 10 months to fill 300 to 400 units. So, it's a whole year by the time you're done, and your lease that you originally leased probably went up in a year, especially on a new build. So lease ups are good when they're stabilized. They're good for rent increases. Really good. Yeah.
thank you.
Good. Okay. Luis, any others?
No, right now I'm still.
Okay.
I actually got like 3 yesterday from wholesalers, so I'm trying to underwrite the 3 that I have plus the other 3.
Okay.
So
Okay. Sounds good.
Thanks.
Alok, you want to share? You have yours?
Unmute. Okay.
Oh, there it is. Okay.
Yeah. I'm going to show okay. So we spoke with this Forest Park, and
Yeah.
yeah, I'm going to just go one more time. I changed number a little bit here. So I'm going to go to share my screen. Give me 1 second. Can you see the screen?
Yes.
Okay, cool. Okay, so this is with 120 units. This is on, we discussed this is close to Beltway 8 and Highway 90 on the east side of the town. And if you look at the number which I checking here, so if you notice here in the T12, their vacancy rate is going higher in last few months. So like 17, 18, 15, 17, 17 in like, in the month of March, April, May, June, July. So I spoke with them. This is due to the constructions and they believe it is improving, but I don't see, at least in July, it's not improved.
Yeah.
And okay, but yeah, I will double check with them. So let me go back to P&L. The area was good. It was just opposite to the high school, which is a good factor. She said a lot of teachers want to come there as per the agent. So in this screen, I just keep $1143 the current rent and I move it. Okay, let me just go. Sorry, let me go to show you. This is 1977 and 2020 rebuilt property. In 2020, they do pretty much entire rehab, the windows, the flooring, AC units. I think it got water or something. So that's what they did after Harvey. They rehab completely. And this smaller 120 units, yeah. Okay, so here I'm keeping the vacancy right now. Vacancy plus concession loss showing 21% as per T12. And I'm keeping here now 16%, 10% vacancy and 6% concession loss.
Okay.
So, and after later, I'm bringing it down to 15%, but I think we can reduce further. But I just, for the sake of, I keep it here 15, 16% overall vacancy. Should
Okay.
I lower it down or we are
No,
comfortable?
no,
We should
that's good. Good to start with this. That's good.
okay, cool. Okay, and here I changed the other residential income. The reason being, I found here, if I go to actual unit mix, there was no pet fees and pet rent was there hardly $300 a year and $780 a year. So what I did for the pet fees, I'm assuming $200 pet fees, 2 units every month and 12 months. So this is my
Okay.
calculation.
Okay. Just a small little amount, but that's good. Yeah. Conservative.
Yeah. And the pet rent, I'm assuming $25 pet rent and 25 units.
Okay.
So $25 pet rent, 25 units out of 100, 12
Okay.
months. Fair
Yeah.
enough?
Okay. Yeah, that's good. That's good.
So this we added, this was hardly like $370. So I brought it to, okay, this thing I want to discuss with you. Yeah, this I'm not aware. So cable internet revenue sharing is not there yet. So how much I should put for 100 units and how much it will cost us? So how much we can make money here? If we add,
Yeah. So typically we can charge $50 to $65 a month, and I would
okay,
do 80. I would do 80% of the units.
okay.
So
So
just do a formula here equal to $60
okay,
times 12 times the number of units times
units are 100
100 times 0.8 times
into
0.8.
0.8. Oh, 100 into 0.8. Okay, give me 1 second. 0.8, right?
Yeah, 0.8. There you go.
Okay.
So we'll have nice little that's pretty high. Maybe
That's
change
pretty
it
high.
to
16,
70%, 0.7.
70.7. Okay. So, but Sanjay, it will cost us, this is the revenue we'll get, but it will cost us some money, right?
Yeah, so there will be a cost. So
Yeah.
typically it's $25 a door for all 100 units.
Oh,
So
wow.
yeah, so you can just do a
Minus, let's say,
difference. Yeah, do minus 25
25.
times 100 times 12. Yeah.
Okay. All right. So yeah, that will bring our expenses in the minus. So,
Okay,
yeah, that
yeah.
makes
So
sense.
that's good. That's more reasonable
That's
on
perfect.
100 units.
Okay, cool. Yeah, this is the thing I want to do. I thanks for
Okay.
clarifying this.
So 20,000. Okay, so you added that there. That's good.
It is coming now from J49 to J52. So that is the cost we added in J49 to J52. This is the one.
Okay,
Yeah.
that's good.
Yeah, this is we added. Okay, cool. So let me go back to P&L. So now we are having netting 1.5 million to 1.7 millions with the lower vacancy and a little bit more cost in the other residential income. They have a very good expense reimbursement. I double verified everything. They are charging everything, water, electricity, everything they're charging back, and which is coming around 80%. So which is fine. So nothing much we can do over there.
That's good.
Yeah, and real estate taxes, Sanjay, I checked, which is good now. If you so they're 10 million, 10.8 to 9.1 in 2024. And this value is based on, this is the value based on our sale purchase price.
Okay, that's good. So
This,
this is based on 9.1 million.
yes, the
Okay.
offer price. Yeah.
Yeah,
Apart from,
you adjusted the personnel a little bit. That's good.
insurance. Yeah.
So
Plus,
rest everything looks good. Plus we are at about 58% expense ratio. So high level, that's good, right? So
Yeah. I mean, in this property management fees, can we keep 3% or 3 point, because 100 units?
we can do 3. We can do 3.
0.
So yeah, so let's go back to dashboard now.
Okay. So yeah. Okay, let me go back to dashboard. All right. So our offer is 8.5, which we can bump up a little bit because it is showing good numbers, right?
And we're doing a 6 cap exit. It's right at 6 purchase, and then there's a refi at 5.5%.
Yes.
You can do
And
24, 24 months right there. Yeah. Change it to IO to 24.
24. Okay. So what does it mean, Sanjay? Does it mean We'll do refi after 2 years, or we can do before 2 years as well.
No, this is a interest only period is 24 months.
Oh, it's a refi year. No.
Refi year is I-28.
Okay, okay. Thank you.
That's where
I-28.
we chose that we will do that refi at the end of year 2.
Oh, okay, okay. Refi. Got it.
So yeah, I mean, we can bump up the price a little bit. Equity raise is a little high.
Okay, let me change, then we'll go back to there. Let's say 8.75.
And Sanjay, how are you determining whether we can bump up the price based on what you're seeing here?
That yellow box on the right-hand side, IRR,
Mhm.
we are always underwriting to a certain IRR, right? Because we'll raise equity and what we can go and raise that the market and investors will be comfortable to invest money on.
And what should we be aiming for with the IRR?
So right now for Houston, Class C, typically we aim a minimum of 20%-ish IRR and a 2x multiple, equity multiple of 2x. But you will see on Class A properties, we've been underwriting to maybe 19, little under 20. If it's a Dallas Class A, I think we can raise money even at 18 or a 17 IRR. So that's really this that box, Class B returns, because at the end of the day, that drives, right? Like if we can provide enough return, we can raise money, we can do the deal. Otherwise, I can't do the deal.
So we're essentially trying to get the IRR down to 20 based on the purchase price
and all the other factors, yeah. So before I start lowering or increasing price, I always want to make sure our financing is good, P&L is good, closing costs, CapEx are in a range that we think it'll work, and then it'll go. So okay, so I'll look.
I bump it to 9 million, Sanjay, and you can
That's
tell
good.
me
That's
where
good.
should I go.
So our year 1 DSCR is 1.29 still. So
yes. So what we should
scroll
do
up.
here? Okay.
Rehab, you said we don't need much rehab, right? So
no, we don't need rehab. No, we don't need. Yeah, we don't need.
Yeah, I think we can probably get a higher leverage. So we put a down payment of 25%.
So down payment here is 30%, Sanjay.
Yeah.
Okay.
So put 25 because
Okay.
scroll down a little bit. Now our DSCR down a little bit more.
1.21.
Yeah, that highlighted yellow is I-36. Yeah. So 1.21 on a pro forma year 1 is good, which could help us a little bit. So
and you want to see the sale price of that, Sanjay? This is
yeah, so like this one, look at this. Like our all-in is $92 square foot and exit is 131. New construction with land and all the costs. So we're going to be exiting at a decent price. So this one works.
Yeah, you're right. I agree. Yeah.
And this one I didn't have concern because based on the number we're looking at, the other deal was a concern. So we paid a lot of attention to that.
Right.
So potentially we can bump up a little more even.
Okay. So here
Because our
2.46.
scroll up a little bit. Yeah, so our IRR is 21. So we can bump up to 9.3.
Okay.
And look at the cash flow. The cash flow is so good on this deal.
This
Average
cash on cash, Sanjay? This one?
Yeah. Average 8%. So
okay. So now it is coming 18.3 to IRR, since we bump it to 9.3
yeah,
now.
so lower a little bit.
Yeah.
This
so
is really a 77 property. So we will need close to 20. Maybe change it to 9.15.
9.1. Okay.
Yeah, so that's close 2x
Yeah, that's
multiple.
close. Yeah. I mean, yeah,
So
9.1.
Yeah, so equity raise is a little high. You can change the CapEx. Scroll up.
Okay. Scroll up. Okay.
Change the CapEx from 70% to maybe a 80%. So I-14.
I-14. Okay. Okay. So
Change
what
it
does
to
it mean,
80.
Sanjay? What does it mean?
The bank will fund the CapEx. The 80% of the
Okay.
CapEx bank will fund instead of
Oh,
us having
okay.
to raise the equity.
Oh, okay, I know what. Okay,
So
okay.
our total loan
Mhm.
now has gone up to 7.3, 7.4.
Okay, I got your point. Okay, so equity raise is now went down by 1% to 34. It was 35 before, so now 34%. Okay, which is
Yeah. So
reasonable, right?
now,
Hmm?
yeah.
Yeah,
So
3 million
this,
is good. Yeah,
yeah. So 3 million raise for a $9 million deal. That's decent.
that's it. Yeah.
This is a lot of work, right? You do a loan first, then you have to do a refi in year 2. So
Yeah, yeah.
it'll be a lot of work. But you like the
So
location and you like the property, right, Alok?
yes, Sanjay, this is very nicely located. And moreover, like as I mentioned earlier, they made a huge detention area. So
Mhm.
which is a very attractive to the whoever is coming to stay there. They will love that open space. Earlier it was she said it was not maintained, so it looks bad. But now I saw that they developed in last few months. It's a pretty big. I saw some picture, but I don't know where to put it there. So it is
Yeah.
nice.
Yeah,
And
so I
it's
would say, hey, we are in
Mhm.
the like a high 8, low 9 million range.
Okay,
Talk to the
okay.
broker, see what they think and where they are at and what offers they're getting. Um,
Yeah, okay.
we haven't gotten a loan quote yet, right?
We got the loan code for Forest Park, and no, I got it from the agent. For what do you
Oh,
call
they had one. Okay,
yeah.
okay,
So I put that number here,
okay,
0.46.
okay. So we have some guidance. That's good.
Yeah,
Yeah,
yeah, yeah.
so high 8, low 9 is it? This might work. So let's talk to the
Mhm.
broker and see what they
Okay.
say, and we go from there.
Yeah, I talked to him. He said submit your offer because they are a little bit in rush in this, like end of this month, they have to decide. I mean, not this month, sorry, in October, they have to
Mhm.
finalize because they are in the verge of bank is want to finish it off. So
Okay,
they
okay.
told me last week I talked to him on Friday. He said submit your. He's the same guy for San Jacinto apartment and the same person for Forest Park.
Okay.
So he said submit your LOIs. That's fine.
Okay.
So
Okay. So when they say submit your LOI, I always ask like, hey, are you getting offers? What range are you getting offer? How many offers? Are you getting close to 10?
okay, I'm gonna check.
And they might say,
Mhm.
well, that's confidential. You say, well, work with me here. Tell me, we got
Yeah,
a baseline.
got it.
If they are getting offers close to 10,
Yeah,
then I
yeah.
would ask the broker,
Mhm.
hey, why should I even bother submitting a 9 million offer?
Makes
And they
sense.
may say, hey, the 10 million offer we're getting is, we don't
Mhm.
know about this group. They are
Mhm.
a
Mhm.
little spacey. They're not responding or whatever.
Okay. Okay.
Or they may have some other reason, right? But
Yes. Mhm.
brokers use them, right? Because they'll hold key information. So I would use them.
Mhm.
And if they say, well, yeah, we're not really getting offers at 10, we are getting close to 9.
Mhm.
So
Mhm.
then it's like, okay, yeah, we'll submit ours and
Sure. Makes
um,
sense. Yeah,
yeah.
yeah.
So have
No,
that one more conversation to get like
okay.
where they
Sure.
are in terms of interest from the market,
Got it.
how many and what price they are getting.
Got it. Will do.
That's
I'll do that. I'll do that.
that bullshit, whatever you need to bullshit to get the information, right?
Yeah,
Like
yeah, yeah.
be
Yeah,
their
yeah.
best friend. So,
Mhm.
and then we can talk about where we submit and what we submit. But in the
Okay.
meantime, in parallel, get the insurance and loan estimates, those two
Yeah.
things again.
Okay. I will double check on that one. I will talk to the broker and we'll update you about it. All right. Sounds
Okay.
good.
I
Thank
will
you.
move this one also to LOI and that phase, so that way,
Yeah,
at least
yeah.
Mike and Shreya conversation I have with them, we
Sure.
can focus on that.
Sure. Okay, cool.
Good.
All
This
right.
is
Thank
good.
you.
Good job, Alok.
Thank you. Sure. Thank you.
Yeah. Okay, Chirayu, 5 minutes.
Yes, no problem, no problem. Sharing my screen. Let me know if you can see this Excel sheet.
Yes, we can see that.
Sanjay, let me divert your attention to this table first. So I went yesterday, very clean property, decent, fresh duplexes, no frills, no amenities, but big size duplexes. Current rent roll is at 1.14 and 1.12 PSF. I called up that 1-800 number because they don't have a leasing office on the site, and they are ending at 2,300 for 3-bed and 2,500 for 4-bed. So they are currently listing vacant units at 1.34 and 1.16. So then I went to looked at 5 properties in 2-mile radius. Not only new, there were newer properties, but I also looked at a 1999 property. In those 2-mile radius, average is even more, 2,349, 2,595. But because these are apartments, these are slightly smaller. But PSF is 1.4 to 1.4C. So contrary to popular belief, this area is growing, and this indeed is getting us good rents. Having said that, this property is closer to a large Exxon gas station which is being built, and time-wise has a franchisee. It is walking distance from one of the primary clean ISD schools. There's a fire station right outside the property. Pretty decent area, and I could not see that this is a mediocre area. I found that area pretty decent. Very close to a large highway out there. Lueta is a large connecting, just like Fry Road is a big connection. So keeping this in mind, that they are already listing at 1.34 and 1.16. Current PNL, do you want to make any changes? Because this should
Yeah, so
significantly
go back.
change.
Yeah, go back to dashboard for a second.
Yeah.
So 3 bedrooms is 23-ish
Yeah.
and 23 above. 4 bedroom is 25 or more. Okay, go to
Exactly.
actuals and unit mix.
Actuals and unit mix.
Let's change the, okay, so you have the 3 bedroom at 23 and 25. Okay, so average here is 2381, right? Let's
So
go to,
this is an old one. This is a target rent. Target rent is not this. Target rent is 2349 and 2595.
yeah, so we can bump up a little bit, 23. Yeah, so you can do 2350 and 2550.
Yeah.
Go ahead, go to actuals and unit mix. 2350 and 2450. Just to keep a little cushion, right?
Okay, sure.
And now our average is 2391, right? And that we have to always be careful of the average. We always want to use that 2391 average. And now go to P&L and let's input 2391. So,
Yeah.
oh wow, okay, yeah. So let's bump up 8 to maybe 12, yeah, 11.
Yeah,
That's good. That's good.
2391 almost. Yeah.
So our hypothesis is we can go up to oh yeah, so now so lower the back to year 1 to 8, yeah. Sorry. Lower year 1 to 8.
Yeah.
Now year 2 we are above 25 average. Our 2400 was our average. So year 2 may be a little aggressive, right? Maybe lower the year 2 a little bit.
But between year 1 and year 2, we don't have any upgrades that's coming into the picture.
No new units coming, right?
Yeah. And there's no upgrades because these are brand new units. So I said, why did he go below the market rent? So he said he's in a hurry to lease this up so he can sell it, take the money out, and do a
So
capacity or something.
lease up always is a lower than market rent because you have a lot of interest, a lot of negative cash flow that you want to make up by as soon as you rent, you get some money. Plus, sooner you rent, sooner you can refi or sell.
Correct.
So even if it's a lower rent, you want to lease it up and move on.
Yeah.
So yeah,
What do you
so
think?
year 2 lower a little bit, just a little conservative, 6%. Yeah, that is still okay. So that's good. That's achievable. 46% expense ratio. And we did okay, so we did 7%. Okay, let's look now dashboard.
Dashboard. So now in the dashboard, a new OM is being released. That assumable loan was a construction loan which this guy is paying off. So we don't have that option right now. So now the option we have is either we take a stabilized debt at 5.67, and I'm using this 5.67 from Walker Dunlop at 25% down, and that covers 75%. For the remaining 80%, LTV, we'll take a supplemental loan, 7.75. If you are
Yeah.
happy with these numbers, then let me know.
So yeah, no, so supplemental will be difficult, right? Such a small amount,
Yeah.
we won't be able to get it. That's difficult, such a small
Okay.
amount. So
So
get
let
rid of that,
me
yeah.
just get rid of that. Okay.
Okay, so it drops to 17.
Yeah.
So their ask is 12 million?
Their ask is 12 million. He said minimum LOI I can consider is 11, but anything below 11, I'm outright saying that, I won't entertain it. And he kept on saying, please, he said, do factor the fact that, interest rates have come down. So demand is increasing. So please do factor it when you're doing your underwriting. I said, okay, I got this.
Yeah.
We had the same experience in Dallas property as well.
Yeah, I think rate you can lower a little bit, maybe 5.4, 5.3 or something. Again, we'll have to verify that, but that didn't make a huge difference.
No.
Um,
Can we do a bridge and refi?
Try, yeah, let's see. I don't think that would be any better.
Bridge and refi, slightly better,
Slightly better, yeah. And
but you'll
interest
have
rate,
to
yeah,
have interest rate.
interest rate can be a little lower, 5.25. Sorry, on the refi.
35 plus mortgage.
7%. How much do you want me to?
Not
No.
that one. I-23.
Yeah.
This one, yeah, 5.25. So that'll make a little difference. So it is a little better with
Yeah.
bridge and refi.
Yeah, but somehow I could not get about 10 unless you feel there is a option to get to it.
Yeah, I'm sure they are really underwriting very aggressive rent
Yeah, they're very
increases.
aggressive. Yeah, that's true.
And that level of rent increase is such a high risk.
Yeah, exactly. I'm with you.
And with bridge, we have negative cash flow in year one, right? So M25, which says inject working capital, which means it's negative cash flow in year one,
Correct.
year two. So go back to stabilize. I think we can do stabilize on this.
Can I ask a question for my understanding purpose, Sanjay, please?
Yeah, go ahead.
So can we do stabilize that because you guys mentioned it should be 3 months should be 90% plus vacancy should be occupied 90% plus. So is
Yeah.
it 90 plus occupied?
It is, right?
It is.
Okay, thank you.
Okay, so we have this. Exit is 5.25. What is our purchase rate cap now? Scroll down a little bit.
Purchase rate cap, 4%. Walk-in cap rate, you mean?
Oh, it's 4%
Yeah.
at this 10 million.
Yeah, because if you see this actually in unit mix, this is as of July.
Yeah,
Even
okay.
July and August, significant changes.
Do a T1. Select T1 on actuals and unit mix for a second.
The actual unit, where do you want me to?
There, yeah, there. That's a drop down, yeah. And go back. So this is NOI is 856. Oh, so look, the NOI is almost double. What is this current NOI of 400?
Yeah, 1 second. Maybe I'm pointing it to a different place. 8.5.
Okay. Oh wow. So it's a 8% cap rate. What is our year one NOI? Our year one is so our NOI is going down. Oh, the taxes. I don't think you think taxes are going to go
Yeah,
up
so
that much?
so I'll tell you, this taxes, now you are looking at 1 instead of.
Yeah, but our insurance is too high here.
Yeah.
Oh, I see. Yeah. So T12 okay, so taxes will be there. Oh yeah. See now look, their NOI is 395 on T12 and our NOI is 6, but on a T1 basis, NOI is mainly because of those taxes.
Exactly. And taxes, they are going to protest to keep the assessed value under 10 million or maximum 11 million.
And Chirayu is 2.5 the percentage or
Yeah,
not?
yeah, this is right. It's 2.524. This is the exact percentage from the company.
Trade value. Okay.
Yeah. So insurance is good now. This is go back to T1 again. Because on T1, or do T3. What is their NOI on T3 basis? 686. Okay. What is the T1 NOI is very high, mainly because of taxes.
Yeah.
Is that it? Go back. Yeah, go back there. Do T1. Is 686 versus. Oh,
No.
look, their income is 1.6, 1.2 versus 1.6. So the cell C12 will change
Yeah.
from 1.62. If you go to T3, it was only 1.27. So what? Okay, go back. Yeah, on a T3, P&L. Our expenses are staying. So our income is now going down. Look, on a T3, they're already at 1.27, and our income is 1.17.
But how is possible that their
Sanjay,
gross potential income is 1.4?
I'll have to drop right now. I'm 7 minutes late to our W2.
Okay, yeah. We can
happy to
talk.
connect tomorrow.
Yeah.
Thanks.
Go ahead, Chirayu. But for everybody else, this T1, T3 for income perspective is a key thing to look at. Because T1, T3 is what's happening at the property from income perspective right now. T12 is what happened over the last 12 months. So expenses, we always look at T12 because 1 month, 2 month expenses are never captured. But rent roll is the rent roll, and whatever the rent roll is yesterday, if we close today, that's what we inherit. And that's what we start charging the income. So it's from an income perspective, T1, T3 is a key. And there's just like this one, we were looking at it and we're saying, hey, we take over and income goes down. Well, we are a bad operator. We are not the right fit if income is going to go down, right? For a deal to work, whatever we do, whatever our hypothesis is, income should go up, right? If our hypothesis, whatever our business plan is, it is income goes down in year 1 to whatever seller is doing, our deal is not going to work. So we always look for that hypothesis where income, how we push the income from where the seller is today after we take over. I'll connect with Chirayu separately and see where it goes and what we can do to increase the income there. So, hey, good. We got through a lot of deals today. Nice, like it. Thanks, Alok, and thanks to Chirayu. Thanks, Luis.
Thank you, Sanjay.
Yeah, so it's 10 o'clock. We'll drop off here, but guys, if you don't have a deal, you're underwriting, let's connect. And Maria, I'll call you now and let's follow up on Sky. Sorry, we're a little behind, but they always have extra time after the call for offer days too. Okay.
Sounds good. Thank you, Sanjay.
Sounds good.
Thank you.
Any other questions, guys? Need help with anything? Good.
Thanks.
Okay.
Thanks for.
Sounds good. Thank you, guys.
Bye.
Thank you.